Hey everyone, the market was pretty flat today. We're bouncing right up against this 563 level, which we've been bouncing around here over the last several weeks, multiple times. You can see this is becoming a major resistance zone on the SPY closing just below that 563 level. We've got the FOMC meeting this week. We'll see what Jay Powell says. Is it going to be 25 basis point rate cut or 50 basis point rate cut? I think that's going to have a big effect on whether we break out from here up into this 570 strike, or if the market doesn't like what the Fed has to say, we could see a retracement from a lot of the gains that we had over here earlier last week. So big decision coming at this zone. We're seeing a similar picture here on the Qs as well. Sean, I know you were looking at the Qs earlier today. Why don't you tell us about the levels you're watching for tomorrow?
Yeah, thanks, Anthony. Looking at the chart, which, I have Keltner channels. These are the top, lower, and middle blue lines that you see. And then this kind of pink colored line is the whole moving average. It's bullish that the Qs are above the whole. We're also holding this middle Keltner channel. And it's kind of interesting, the Qs seem to go from looking the most bearish to me amongst the indices to now looking the most bullish. The types of candle that we're seeing, can be reversal candles. So we want to be cautious about that, but they can also be continuation. And I would think as long as we hold 469, as long as we hold that, I think going into the Fed, we may be looking higher, even if it's temporarily, with this 492, 493 level in focus.
Yeah, I totally agree. 469 seems like a level we need to hold on the Qs. If that holds and the market likes what the FOMC has to say, I think 480 is the next obvious target. It's the largest gamma exposure concentration level on our GEX levels chart. And you can see this was an area that we were topping out at about a month ago. And so it wouldn't surprise me to see a retest, especially on the back of some good economic data of that level. Another name we've been watching closely is GLD. GLD breaking out of its big consolidation zone down here between the 230 and the 233 level, ramping up really nicely, just about to tag the 240 level, which is our largest gamma exposure concentration. We actually posted in our community Discord earlier today from a trade idea that we had back on September 3rd, which was selling the September 20th, 230, 227 put credit spreads. At the time, GLD was just bumping up against the 230 strike, but we saw large positive gamma exposure growing at the 235, 240 strikes. And so we felt like there was a really good chance that demand could continue with these growing gamma exposure concentrations. And so we felt selling the 230 strike gave us a decent risk reward probability. And that actually ended up playing out really nice over the last couple of days. As I mentioned, with price ramping right into this 240 gamma exposure concentration. You can see the shift in the gamma exposure. The largest concentrations were originally the 230 and 235 strike, but this is a key feature of gamma exposure. We're measuring real-time data, and so as price continues to move higher, as market participants continue piling in to these other higher strike prices, here we're looking at the volume by option strike price. So even today we saw large volume coming in at the 235, the 238 strike, the 240 strike. This is all volume, market participants piling into these strikes. And so as we see market participants continuing to move up the options chain, it forces price higher until we reach some of these dealer cluster zones that we have identified here. So something to watch for. This was a trade that we actually exited today, and we're going to be looking for a slight pullback, hopefully in the next coming days. And we think gold prices have more room to run over the coming weeks. We'll potentially be looking for another move into this 245, perhaps even the 250 strike. Ultimately, that may take, a month or so to play out, but that's something that we think has a pretty decent probability of playing out as volume comes in, starts building at these higher strike prices.
Yeah, Anthony, I wanted to look at Goldman Sachs, which if you look at the chart, It's had a nice bounce. It seems to be respecting this lower Keltner channel. And we're almost to this 493 that represents the middle channel. If we flip over to the gamma levels on our website, you can see Goldman Sachs has this large gamma cluster at 500 and 500 there, 480 here on the negative side, and very nice positive overall total gamma. So I like Goldman Sachs for even if it pulls back in the next day or so, as long as it holds pretty close to this 480 level. We have big gamma clusters at 490 and 493, which matches perfectly with that middle Keltner channel. So to me, it looks bullish, and we have a couple of different metrics to look at to back that.
Great, thanks for that, Sean. Yeah, next I want to look at Broadcom. That's a name we haven't talked about too much lately, but it's had a really nice run from the 135 level, which you can see was one of our largest gamma exposure concentrations on the negative side, bouncing off of that level, breaching positive gamma exposure along with the rest of the market last week. And it's bouncing today off of this 160 level here. And I think the next key level is going to be this 170 strike, which is another one of the largest gamma exposure concentrations on the upside. You can see this was a level that was tagged back in August, rejected from there. And now here we are come full circle. I think a lot of this is going to have to do with, of course, FOMC on Wednesday, but the 170 and the 180 levels are key levels that I'll be watching for a continuation of this move higher, assuming that the market likes what the FOMC has to say. So it's a little bit of a binary event, I think, on Wednesday. There is some uncertainty, but it's important to know these key levels heading into these big events like we're having this week. And so these are the levels I'll be watching on Broadcom. There's a number of different ways you could play uncertain events. Straddles, long iron condors, double diagonals, double calendars. There's a number of different option strategies that can allow you to capture moves in uncertainty, giving you exposure both to the upside or the downside. And so we explore a number of these different strategies in our community Discord. We invite you to come on in and say hi. I'll put a link down in the description below. Also, if you're interested in incorporating gamma exposure and option flow analysis into your trading strategy, head over to geeksoffinance.com. We've got a couple of different membership tiers. All of our members also get access to our Geek University course, which is a 5-hour option strategy, gamma exposure, and our trading approach, along with our data analytics, combines for a full trading arsenal. So definitely check that out when you get a chance. Thanks so much, everybody, for watching, and we'll see you guys in the next video.